double check this is all working properly, guys. This should be streaming through to YouTube. If you're rewatching this later, we'll give everyone a minute or two to tune in. And we'll keep an eye on the S&P 500, the ES futures in the background here that look like they're just about to tank again and make some new lows. And Bitcoin is holding up a little bit better, which is pretty awesome. And that's exactly what we're going to dive into tonight. All our usual macro stuff. So guys, give this a like, share it around your favorite crypto group, in your crypto chats, this, that, and the other. It's been fantastic to see so many new people joining us on our financial journey with that crypto focus. And it looks like this is all coming through loud and clear. 100 watching already, gee whiz. It's funny what a bit of blood will do in the streets. So, hey Ben, Roadrunner, g'day Troy. Yeah, Bitfinex and OKX are offline now. So I'm going to talk about those. I do try and time the window to catch our European audience as well. It's a Friday night in Australia, UK afternoon, I believe there, and the US very early morning. I think they're not even waking up yet. So this is why it can get so nasty for them on their markets. This is the biggest point drop in history, as the title of this video suggests. It's not the biggest percentage drop for a week yet, ever. I think it's the biggest percentage drop since World War II. Either way, it's really nasty. And the scary thing is we possibly got a long way to go, which I'm going to talk about tonight as well. Moonboy in the chat, JB, having a corona. Is it too soon for those sort of puns? I do love a dad joke, but look, the coronavirus isn't that serious in terms of how deadly it is. We know that, but it's just what it's going to do to the economy because we have to try and stop it spreading. CoinSpot bundles, I'm going to mention them today. Mega Speargun, hey mate. Hey Sam, Unknown Owl, and hey Fox. Okie dokie, 200 watching already. Wow, this is awesome, guys. Look, I've been a little bit scared to do live streams since the YouTube ban, so I deliberately didn't put crypto or Bitcoin in the name of this. I didn't put any keywords like that in the description or in the YouTube, the show notes and everything that we have to do behind the scenes that you guys don't see. So hey, fingers crossed that this one doesn't get shut down. But a lot of the YouTubers the first YouTuber had their channel taken away from them today, 3 strikes, which is pretty scary. So you guys are awesome. I do thank you for all your support. And we're going to talk about some Real Vision trades. Hey, I would love to get Raul on for part 2 of our most watched ever video to talk about what he's doing. I'm going to talk a little bit about what I'm doing tonight. But if you've been following the show closely, if you watch our Sunday video every week, if you're one of our members in my group, you probably know how I'm positioned fairly well, and that it's not really a surprise. Sure, the coronavirus has been the catalyst and everyone's going to blame. But, you know, when you zoom out and think there's 22 cases of coronavirus in Australia and no one's died yet, that I believe, correct me if I'm wrong, is that what is responsible for our stock market plunging, the biggest ever drop in a country of 25 million people, where 1 out of every million people have got a cold? We have to be a little bit realistic, and people love to create a narrative. I do tend to try and fit narratives, the mix of fundamentals and TA and sentiment. How many times have you heard me say that at the end of the day, sentiment is what drives markets? That's the most important thing. Whether you're a trader, an investor, fundamentals, doesn't matter what style of TA you do. When you decide to click buy, that's the sentiment. You're either positive or negative because of something you see or something you hear, something you do, research, whatever. And at the moment, the worst pandemic we've seen in years, that's going to create some pretty bad sentiment. And stocks are dropping again here. All right, so guys, thanks for everyone that has tuned in. We've got 300 now. I am going to get into it. Give us a thumbs up. Share this if you haven't already. But if you've just joined us, we are just making new lows now on the S&P 500. So this is ES1 exclamation mark to see the S&P 500 futures, Dow Jones Industrial Average. This is even worse again. So let's just bring up our percent move, go from the top. We're now down around 15%. So 10% is correction territory, and that's what the headlines were today. And less than a day later, we're down another 5%. And 20% is what we count as a bear market. Some people call it 19. I think some countries classify 25%. But once we hit that 20% mark, generally, that's when all the newspapers and websites, you're going to read that, that title about a bear market. So at the moment, I've just got the Bollinger Bands on, which give us a 2 standard deviation move, and you can see that we're well outside that. So that tells us this move might be 2.5 or 3 standard deviations. So these are the sort of events that only happen maybe 1 out of every 100 times, maybe a 1% to 2-3% move. So very, very scary stuff. And when we have a look on the weekly time frame, we're well outside that Bollinger Band. That is a nasty, nasty looking candle. We've still got this trading session to go, so this is probably going to be larger volume than back in 2018 when we had this big tantrum that the Fed were going to try and raise interest rates and whatnot. So at the moment, I think one of the reasons that this is so bad is because people know that economies are going to get shut down, globalization, interconnectedness, but it's more so that what's happening is very bad. It's going to stop economies and the global supply chain, but it's what happened beforehand, how overbought stocks were. So let's just bring up our 200-day moving average. This is our 200-week moving average on the weekly time frame, and I think we're probably going to revisit this on the Dow. So that'll be 23,000. So that's a 7,000 point drop. Maybe we get a bit of an interim bounce, but it's very, very normal throughout history to come and revisit that 200 week. So let's bring up the S&P 500, see if we've got some more data. And let's go back to 2008 during the GFC. At that time, we were very, very extended, well above the 200 week moving average. We came down, bounced again, failed bounce, roll over, come back, almost retest it. And then look how far we got beneath the 200 week moving average, 50% below that 200 week moving average. So let's go back to present day. This is the inverse head and shoulders I had, and I think I tweeted and spoke about in videos how I think this is going to break out. And we were trading down here when I said this. We're probably going to have a parabolic blow off top, and fundamentals went out the window, and now here we are. And if we drop another 50% from below the 200 week moving average, that would be down to 1,300 points, which would make a total correction of around 60%. So I don't think that's going to happen. What is going to stop this bleed is the first incidence of the disease slowing and getting under control. Now, at the moment, as we're talking, let's just have a look at Bitcoin. At the moment, we were hoping for Bitcoin to find support in this golden ratio here, and we're just breaking those levels now. So that's what I was hoping to hold. Last chance here down at the 78.6% fib. If that breaks, I'm hoping that it doesn't get too bad. Look, Bitcoin has held up a lot better than stocks recently. I'm going to talk about that in just a second, but maybe 8,300. That's where I'd be hoping we can get a bounce. 8,200. We'll have a look at some more support levels shortly, but let's have a look at the 200-day moving average for Bitcoin, just to show you guys where we got a bit of a touch yesterday. And if we look at the exponentials, I think we kissed that perfectly here on the purple. You can see the 200-day exponential moving average. So that's sort of where we love to see support, where we did have a bounce. But let's just run through a few things. So here are the headlines: the largest point drop in history, not the largest percentage move just yet. If you've been watching our videos, I've been speaking about what you need to know before the next financial crisis. A couple of days ago, I did my update on the coronavirus, how that's going to affect Australia, and it's probably the economy that's going to be affected the most, if we're just being honest, because of proximity to China. If you haven't watched that, I recommend you do. The other one that we did do was on the 20th of February, called Global Asset Bubble. most recent update, the world has gone mad. And if you have a look at the day we did that, it was right there, the 20th of February, where I was saying, I just can't believe that stocks are charging high because the coronavirus is nothing new. We knew about this for a month, all the way back in December. Most of the world knew about it by January, and stocks just shrugged it off and continued to go higher. And that was the point of absolute ridiculousness, where we were reading these things like, retail investors making money and whatnot. We'll get to a few of those headlines in just a second. But the thing I said last week is that the Fed are planning to reduce their repo support. So I think next week is going to be a red week either way. And sure, the coronavirus is getting the blame, but this is probably something that is adding to how bad it is. Now, we've seen record amount of money go into bonds. Investors are flocking to bond funds and bonds in absolute record numbers, billions and billions of dollars. And that's why the interest rates are getting absolutely crushed, because they don't need to offer you a higher interest rate. Everyone wants to buy them already. So, hey, I can offer you a lower interest rate. But these investors that have made good money, they're happy just to protect their capital now. So we're seeing yields get absolutely crushed. This is the lowest the 30-year yield has ever been. And we're getting close there now on the 10-year yield as well. So while I've been harping on about protecting your capital, if you can do your self-managed super fund, I know plenty of you do that, and we have that partnership with New Brighton Capital, but it's more been about educating yourself. And how many times have you heard me say, at least know what you're invested in? So if you can't do self-managed super, know what your super's in and know how to go defensive at the click of a button or a phone call. And this is why, hopefully, if you've been prepared and watching our videos, you're a little bit protected. So the coronavirus, the latest data, it's actually slowed down. So when you look at when the stock market started to plunge, it's when the actual number of cases has started to taper off a little bit. Now, yes, in some countries it's ticking up. It hasn't really gone exponential yet. This is very, very few cases. So what we're now waiting to see is this going to slow? Is it contained, or is it just going to keep spreading? And if it does start to go parabolic in all these other countries, that's when we can be looking at a GFC style event. Maybe stocks could go down 50 or 60% like we spoke about at the start of the video in that scenario. Now, Australia has only had, I think it's 20 cases, is it here? But already we're hearing these stories of people going to supermarkets and trying to stock up. So this has happened in Italy and these other countries that have been hard hit. The government is coming out. In Australia, you won't believe what they're saying. We're not even doing thermal imaging at airports at our borders to try and pick people up with a fever. Now, that doesn't necessarily pick everyone up because it can be asymptomatic. But they're also telling people don't panic and don't stockpile food. They actually said today that you don't need to wear a face mask and don't waste face masks. So I just don't understand what is going through their head. Why wouldn't you rather be safe than sorry? But anyway, that's another story. Really, really suffering Chinatowns around the world. There's great Chinatowns in Melbourne, in Sydney, most places around the world. And people just aren't going there. I know it sucks. Again, it's nothing probably racist or anything like that. It's just people saying, well, I'd rather be safe than sorry. Even if I deem the risk to be low, they're not going there. So these are the sort of things that are really crushing local business. And no one's going to be going out to any stores if this starts to pick up, let alone Chinatowns. Retail is going to get crushed. There's actually some businesses that could do well. If everyone's at home watching Netflix and streaming or buying everything off Amazon, hoping that someone's going to deliver it to them, hey, those stocks could do well. So Troy shared this before. These are lines in Melbourne. So yeah, definitely something where I don't think it's been a prepper. I don't own bullets. I'm not a prepper with heaps of canned food, but of course I want to make sure I've got some extra for possibly a couple of weeks at most. There's nothing worse than not being able to, feed your family, or if you've got the baby, those sort of things, you want to be able to protect your family. Now, the other thing that of course has been rushed through on a Friday night when everyone's talking about something else to try and distract them, this has been given the all clear by the Senate inquiry, and it looks like it's going to come into law. The $10,000 cash ban, where you can go to jail for using $10,000 worth of cash to pay for something. We know banks are going to make it very hard for people to get money out. They already are. I mean, I've said it 100 times. You guys know the story. It's never been more important to have a way to get out of that system and not to be censored, not to be shut down, not to be told, oh, you can't get more than $100 out. Or the ATMs are shut today because coronavirus has spread, no one's working, there's no way to fill them. we're seeing things like banks go down monthly in Australia and our payment system. So look, part of our new resources over on our website there, guys, the resources hub, a few of you have already checked that out, but gold and silver, precious metals investing, have the physical, start there first, and then you can work your way into the trading and hedging, investing, those other styles as well. All right, so this is the most important chart to me, and tonight, this week is Bitcoin's most important week in its history. Now, what I said in this tweet is that the best thing for Bitcoin to do right now is not to go up when stocks are plunging and everyone say, haha, look at Bitcoin, or we don't want it to track gold and act like gold. Now, yes, at stages it has been correlated to gold when there's financial stimulus and money printing and things that make them both go up. But the most bullish possible thing for Bitcoin is to act uncorrelated and do its own thing. And at the moment, it's not doing a very good job of that. You can see gold in the black there, that's been trending higher. Since stocks started selling off, Bitcoin basically sold off as well, pretty highly correlated. Now, I actually don't think it's necessarily following stocks just yet. Some people, some investors are going to take off any what they deem to be risky assets like stocks, and maybe they view their Bitcoin as risky. But it wouldn't surprise me for Bitcoin to start to do its own thing, hopefully tonight, maybe over the weekend, and that would be just mind-bogglingly good. If Bitcoin can prove to the world that it's not getting dragged down with stocks, it's uncorrelated. It went up one day, down another day. That was just a normal correction for Bitcoin because it had had a big run. Now it's doing its own thing, showing the world that it's that unique asset class. That to me would be absolutely amazing. Now, just quickly, altcoins are going to take a beating in these sorts of situations. They're definitely, if Bitcoin has a safe haven aspect to it, altcoins don't really have that, do they? So altcoins are getting harder hit at the moment. Just quickly, let's have a look at the chart of Bitcoin dominance. Where are we? Just here. We can probably see that, Bitcoin has had a bit of a bounce lately, and we actually didn't even lose that trend on the weekly time frame there. So whether or not this is just a little bounce before we roll over, or Bitcoin is going to assert its dominance if this turns into something nasty, alts would most likely sell off. So having a look, Bitcoin does look like it is going to head a little bit lower here. We'll get back to that in just a second, but I just want to mention this quickly today. The bundles on CoinSpot, I've been talking a lot about FTX. They've got their awesome bundles like the large caps, mid caps, shitcoin index. They also added the exchange tokens bundle and then the privacy coins index. So look, I've been pushing for something like a DeFi bundle, and for me to be able to choose what coins go in it, as well as the tech and gaming and computing bundle, you can head over to CoinSpot. There's a link down below that gets you a bonus, which we're still working on, but as long as you use the link, you'll qualify. And for our members as well, you'll get a double bonus. But there's some more coins to be added to this list. CoinSpot didn't have all the coins that I wanted in my DeFi bundle, so hopefully they are going to be adding more coins, as well as this tech gaming computing bundle. The coins that I've covered that I like, good partnerships lately, Wax, Mana. If you're in our members group, you know the coins I own. Now, how should you trade this? If stocks are going to keep bleeding lower, the easiest way, what I've been talking about, why we partnered up with eToro, was because you can, short stocks. If you think you want to rotate into bond markets, you can go into that bond market ETF. If you want to seek, or if you want to trade gold and seek that protection, you've already got your physical gold and you're happy. You can do all this with a click of a button on eToro as well. So don't use leverage. Only do what you know that you are capable of doing. Otherwise, going cash, being defensive, having options. How many times have I spoken about having that freedom, the protection? And me personally, in my super, I'm pretty defensive because I wanted to buy assets on the cheap if we get these big corrections. So look, each to their own. I can't give you financial advice. Only you know your own situation. But having that plan, hopefully by now, you understand what's going on. This is the last week we've got that $100 Bitcoin sign-up bonus if you do want to open up and have a bit of a trade on eToro there. Now, let's talk about the crypto markets. Denial of service attack on Bitfinex. Troy said OKX as well. Well, what do we know? 90%, nearly 91% of margin traders are long on Bitfinex. So if we make a new low, that is going to be a big squeeze, a long squeeze that's going to push price down, possibly lower on Bitfinex than other exchanges. Even spread at the moment on BitMEX. A lot of shorts on Binance, which is a bit of a surprise. And the other website that I normally look at, let's see if we can bring that up just quickly. BitMEX resources. Again, you don't know how accurate this data is. The BitMEX leaderboard, currently 64% of people are long, expecting a bounce on the leaderboard. The troll box, retail traders, a little bit longer than shorts as well. So the last couple of things before we have a look at price and see if that does make a new low. Wall Street becoming complacent. So volatility, the number of people betting that volatility was going to remain low was near record levels. And when we have a look at the VIX, guess what? These people have been absolutely burnt. So some people say, oh, you can't trade the VIX. The volatility index, you can't do TA on it, this, that, and the other. But just have a look how clearly this broke out, whatever you want to call this pattern, triangle, wedge, even further back here. Compression of volatility, and then we get the rapid expansion. So the VIX has gone from 12, which means that stock investors are not expecting more than a 12% move up or down in the next 12 months, up to 50%. So just like we spoke about before, another 50% down from here would be that 60-ish% correction. So at the moment, that is the level of panic that Wall Street traders themselves are looking at. They're looking at options. All right, so let's head back over to Bitcoin. We are about to drop to the new lows, it looks like here. Let's see if that 8,300 level can hold, and we might even execute a trade together now. Other things to look at, Ethereum was holding up better. It did have a stronger bounce, but as I just mentioned, alts are going to take a big hit. Let's get rid of all this clutter on the charts. Where are we eyeing off our 61.8% from the high to the low? That would take us down to 180. If stock markets bleed hard, there's a chance that crypto could get down that low. But again, let's just wait and see. I'm not giving up on the fact that Bitcoin can do its own thing, and that's why tonight is the most important night in Bitcoin's history. Anything else I had planned tonight? No, just at the members group, and we are streaming live. So I'll have a quick read through the comments. Bonds, TLT, gold and silver, safe havens. That's everything I think I had on my list. Volatility, expansion. What do you guys think? Are we possibly staring at something a lot worse that can continue for weeks or months? And when we've gone down 15% in 1 week, can we have a bad month, a few months? Are we going to get a bounce? Let's have a read of a few of your comments now. Don't forget pet food, someone said. Stock up on whiskey and beer. Simon Jordan, dislike. What have you disliked, Simon? 112 thumbs up and no thumbs down. You guys are legends. What do I think of Rocket Pool, says Shimbob. We did an interview 2 weeks ago, so check them out. I absolutely loved it. To me, that was a little hidden gem, finding an Aussie guy that was so knowledgeable. That was one of my favorite interviews, the Rocket Pool interview. Last GFC, the Aussie dollar went on a bull run. So the Aussie dollar has been getting smacked. I think 11-year lows, if I'm not mistaken. 65.2 we hit today. So we're only a couple of cents away. 60 cents we hit in the GFC. And then we'd be going back to the levels in the early 2000s. Not much more to say there. Watch the video I did about if Australia will enter a recession because of the coronavirus. When I look at Germany and some of these other strong economies that are already at 0% GDP growth, and I know how intertwined and reliant Australia is on China. You know, some people say I'm a fearmonger, whatnot, but guys, I've been bullish on stocks. You know, if you've been watching the channel, I've been saying stocks will go up as long as there's easy money. Now, last week, the Fed said they're going to start to try and withdraw that easy money, and I did a video talking about how I think it's now madness that stocks are going parabolic at a time when they should be correcting, and it's all sort of come out at once. Now, there's going to be a time when to buy stocks, when there's blood in the streets, when everyone's given up and whatnot. But, you know, what have you learned from going through a crypto bear market? Don't try and be a hero and catch that knife. wait for some divergence, wait for a daily uptrend, this, that, and the other. Just because it's your favorite stock's fallen 20% this week, there's no reason to rush out and buy at the moment. The other thing, just to highlight quickly, if you follow the channel, you know my rules about Bitcoin being the king and the cornerstone of your portfolio, the blue chip. Don't muck around. I know the temptation. Someone said, what if people buy these alts and they blame you if they go down? Alts are a very small part of my portfolio. You want to be accumulating Bitcoin. Alts are speculative. Treat them like tech stocks or tech investments. They're very different to use case to Bitcoin, which is that new money financial system. Gold and silver got slammed today. This is very reminiscent of the GFC now, isn't it? With gold and silver selling off in the initial stages, and they'll likely do well when central banks come out and talk about what they're going to do. Now, in Hong Kong, as I showed you yesterday, we got the news that Hong Kong $10,000. Oh, sorry. Hong Kong government to announce these $10,000 Hong Kong dollars handouts, which I believe is about $1,300 US dollars, maybe 2,000 Aussie dollars to each resident. So this is what Australia did during the GFC to try and stimulate the economy. It actually worked fairly well. It's one of the things that I think helped get us through, as well as obviously the China boom. But with governments not having many bullets left in the chamber, they can't really drop rates. Australia and the US are probably the only couple of main countries that are even got 1 or 2, 3 rate cuts before they get to zero. The Fed know that people are going to jump all over their back if they use the word QE or bailouts, so they have to use new language like repo operations or these government handouts. Maybe these are the new things that they're going to try and fool the public into there's nothing wrong. We just need to help everyone out a little bit. Really, it's modern monetary theory. And the Fed are probably going to have to do a backflip less than a week after they said they're going to cut back on repo markets. They're probably going to have to ramp up repo markets, cut rates, and start to talk about what other stimulus they're going to do. If this continues this bad, they have to do something. They're probably going to make shorting illegal. Yes, that happened in Australia. They banned shorting for months. And that's why sometimes brokers like your eToros of the world are actually better, because while the stock markets are banning shorting, these other brokers, CFDs and whatnot, sometimes that's the more advantageous way to short, to hedge and whatnot. Now just be mindful, use your stop losses, because if we get some good news, stocks can rip to the upside. Nothing is going to surprise me here. Central banks come out and say, we're going to print $1 trillion a month. We're going to do whatever it takes to stabilize world markets. Would that surprise you? Cash band report. Yeah, I just touched on that as well. Someone said, can't believe IOTA's in the bundles. Guys, IOTA is not the first time they've shut down. IOTA is not pretending they're decentralized. It's trying to do the Internet of Things with a Tangle, which is a new technology. They know they're centralized until they remove that coordinator node. They've partnered with Microsoft, Bosch, Audi, a number of big companies. It's these big companies don't just partner with IOTA because it's a shitcoin. They do their research. So yeah, IOTA's down at the moment, fixing some bugs and whatnot. But all these coins are risky early stage tech. That's why I only have small allocations to them. Why is silver lagging gold? Because people aren't convinced about this rally yet. Gold and silver investors have been burnt for years and years. Every bounce they thought it was the bottom, and they've been getting smashed. So it's like Bitcoin. Once it starts to really ramp up, and probably once it breaks all-time highs, all your mates will be asking you how to buy silver. Sometimes I think it's still, so I think it's frozen. Sorry, I'll try and bobble around. People will be rushing to gold right now. Let's block my channel. I don't know about that, D-Vlogs. All that content's always over on library, guys, if you need as well. How long we've been going for? About half an hour. So at the moment, Stocks are just teetering on that edge. They've had a little bounce, but they have made new lows, and really, really hoping Bitcoin can stamp its authority tonight and at least hold this trend line here. Let's go back to auto. Hold this line here and stamp itself as a mature asset class. If things get really nasty, though, it's people rushing to get cash in their accounts, and that includes gold, silver, and Bitcoin. Well, guys, I think I'm going to wrap it up there. That has been half an hour. I didn't want to make this one a long one. That is my thoughts. Have your game plan. Do you know how to get defensive? Do you know how to get into gold and silver? Do you know how to get into Bitcoin if you need to? Do you know how to short markets? Do you know how to get into bonds if you need to? Take advantage of that $100 there with eToro. If you want my multiple daily updates when things change, you can join our group by heading over to the website. Check out those bundles over on CoinSpot, our resources guide, everything you need to know about gold and silver. And I hope you guys are staying safe. Look after yourselves, and I'll talk to you in Sunday's market update video. Cheers.